Welcome back. And today I'm going to talk about real estate secret wealth creator. This is a hidden real estate wealth creator. It's also called inflation-induced debt destruction. My name is SeeWing Yi from the Yi Real Estate Network. And once you finish hearing this presentation, you will never look at real estate investing the same ever again. Okay. This information, uh, not only a rookie investor definitely does not know. There's a lot of experience. So so-called experienced real estate investors are not even aware of this core investment philosophy. Once you learn this, you will be a much better real estate investor. You will be much successful risk investors. You can feel good about yourself. You can feel inspired and motivated to enter the real estate investing game, regardless of your strategy, regardless of what buybacks you have. All right. So just have an open mind and just hear me out for the next 20 or so minutes. So here we go. All right. So again, hidden real estate wealth creator. Right, first and foremost, let's look at this from a very, very high level. Real estate investing, rental property, only like 40% of your profits are visible, is above the uh, iceberg, if you will, right? Which is your cash flow. You see it. You see the rent check coming in. You see the cash flow. You see the passive income, and you see your property will grow over time. Okay. What you don't see, what is that the hidden wealth of rental property, of income property, is such that it's just that you it's such that it is a phantom profit. It's below the iceberg, as you can see, right? Okay, you're not a Titanic, you will float. Okay, okay. If you understand this concept, you're not gonna sink. You're not a Titanic. You will float, float very successfully for a long time. So and of course the under the iceberg is the depreciation, is the leverage of using fixed rate debt, which is what I call inflation-induced debt destruction, which is a term came from Jason Hartman, by the way. I did not created this term. Okay, I just a lot of people have followed this real estate guru for many, many years, and I love his concept, his philosophy of the inflation. It's a mouthful. Is inflation-induced debt destruction, which is the acronym is IIDD. Okay, all right, leverage and equity growth and so forth. Okay, it's a more realistic rental property is the most historical proven asset class in the world. It's the greatest wealth building. You're making money many different ways, right? Cash flow, rental rate increases based on inflation, tax benefit of all kinds, appreciation, long-term equity growth, and the power of using a amazing leverage 30-year fixed rate mortgage, which no other country in the world have this type of amazing mortgage. It could allow you to leverage your money with the. All right. So again, I'll be real quick. Okay. That's for the next few slides. You can pause the screenshot on your own, but rental property is not like any other asset classes, right? And you just any other asset you buy dollar for dollar, right? You make a profit when you achieve capital gain, when you sell in the future, whatever. But real estate is a multi-dimensional asset class, right? After you purchase any kind of rental property, you can convert it to an Airbnb short term. You can add an ADU. You could rehab the house. You can hold on. Yeah, you can rehab the house. You could change the rental property into a owner occupied, into a primary home, into vacation home. You can do a 1031 tax exchange. You can do a tax-free cash out refinance of your equity to leverage into more rental properties. You can use tax status, real estate professional tax status, although I'm not a licensed tax advisor, consult one. And yeah, bonus depreciation, 100% cost segregation, the whole short-term tax loophole. You could deduct all kind of expenses such as travel expenses, meals, entertainment. You can reduce your rental income subject to ordinary taxation, the whole 9 yards. But today's presentation, from a high level, let's talk about mortgage. Let's talk about debt. Let's talk about good debt. Let's talk about inflation-induced debt destruction. What do I mean by that? Here we are, okay? Just have an open mind. All right, so you borrow cheap. You borrow to this interest rate. I know, don't worry about interest rate. It's just either here or there. Uh, yeah, you borrow the money, you borrow cheap money, and you repay your debt with cheaper future dollar due to inflation. All right. You borrow at today's cheaper dollar. Okay. And you buy today's dollar, repay in future dollars, which is worth less, right? Due to inflation. It's called inflation debt, induced debt destruction, a force working in your favor. What is the real cost of debt? Fixed rate is amazing, right? I mean, what residential investing 1 to 4 units is mostly 30-year fixed rate. You can't get any better than that. This is a good use of your debt. There's no other countries in the world that will give you a 30-year fixed rate debt. So you guys, I tell you, you gotta have it so good. Americans have it so good. Okay. So anyway, when you start owning rental property, your rent's gonna rise along with inflation. It's all historical, right? Look at history. The real cost of debt declines, right? Due to inflation, it would debase your dollars. So myth versus reality. The myth is inflation does not create monthly cash flow. That is the myth. But the reality is it creates a hidden wealth effect over time. What do I mean by that? The math behind the wealth effect. You get a loan with a balance of 500,000. If the annual inflation is 3%, which is very, very conservative estimate, is probably in reality is a lot higher than the annual historical inflation of 3%. Go look at your groceries from this year, from last year. All right. So therefore, this is the basic, simple math. 3% multiplied by this amount of mortgage debt, the real debt reduction is $15,000. This is inflation-induced debt destruction. There is a economic hidden wealth effect associated with this calculation. Okay, so you get equivalent to $1,250 a month in equivalent purchasing power savings on the debt alone. Are you beginning to see this from a high level? Oh, you need to just visualize what I'm talking about. You just close your eyes for a moment and just digest what I'm teaching you. Just visualize the philosophical effect, the conceptual effect, the reality and the streams of profits. So in terms of streams of profit, total return on your investment come from 6 streams, as I alluded to you earlier at the beginning. It's cash flow, which will increase over time due to inflation, right? Your rent could increase over time. That's how it is. Okay. It is history. Those who do not learn from history are doomed to repeat their failure. Did I say it right? I'm not even sure, but you know what I mean, right? Okay, second thing is appreciation, right? It's, if you buy in real estate in a good appreciation market, that's where most of your wealth is being built through equity growth and appreciation. And of course, who's gonna pay down all your debts, all your expenses on your rental property? You could, the people, the individual who's going to pay off your debt or someone called the tenant. The tenant is going to make you rich. The tenant going to pay off your monthly mortgage, your taxes, your insurance, your property management fee if you have it, your vacancy, your upkeep, your maintenance, the whole nine yards, right? If you place a high quality tenant on your rental property, is what is loan pay down. You're gonna once your 30-year fixed rate mortgage or whatever your mortgage you have is being paid down by the renter, by the tenant, right? You're gonna increase. Right now, you are at like 75% or 80% loan to value with the applicable 20 to 25% down payment, right? But I mean LTV, right? Over time, the next 5 to 10 years or longer, your loan balance can decrease and your equity and your appreciation going to increase. So the spread, the profit margin, is you're gonna have lower LTV, lower loan to value. Right now, the spread is 20 to 25%, hence your down payment. But in the next 5 to 10 years, depending on what property, what market, what have you, and how fast the tenant going to pay down your mortgage, ultimately in 5 years, you may have like 50% loan to value, which is, your market value of, let's say, 100,000, simple math, minus your loan balance of 50,000 equals equity of 50,000, right? You have 50% LTV. In the next 15 to 10 years, if you can, or even 20 years, you could have no debt. The 30-year debt has been extinguished. So you could have 0% loan to value, right? So you have all that equity. But all the equity, don't let it sit, right? You let it sit is debt equity. So, people will do cash out refinance from the equity of their portfolio. They can leverage to buy more property using loans, using good loans, mortgages, right? Of course, don't over leverage, right? Like of course, you need cash reserve, and don't, it's just you just maintain a loan LTV, loan to balance ratio, as I call it, right? Of course, tax benefit is amazing. You have every individual have different type of tax strategy based on your income, based on what you're gonna do, just how you're gonna apply. So that's a different ball game. But suffice to say, you get phantom write-off, you get a paper write-off through depreciation over time, over 27 and a half years, or you can do a acceleration, do cost segregation. You can accelerate your depreciation to reduce your potential W-2 income, your active income potentially. But I'm not going to go over the tax benefit. I produced a lot of different YouTube videos to adjust the tax benefit. Is an individualized situation. Consult your tax advisor. Of course, inflation-induced debt destruction, and the power of leverage. No other real estate asset class can give you leverage, right? You can't borrow against a stock to leverage your stock acquisition. You can't borrow against Bitcoin or crypto or whatever, but you can do with rental property, right? 15, 20%, 25% down payment, even lower if you're gonna buy a primary home. But I'm talking about rental properties. But if I were to deviate and talk about owner-occupied property, you can do 100% leverage, 100% financing, right, on a VA loan, which I've done for many, many times over my lifetime because I'm a military veteran. Or you can do a FHA, 3.5% down payment, or 5% down owner occupied. So that's the loan to value is quite high. 95 to 100% LTV. So those are anyway. All right, you know what I mean. All right, so let's go on. Let me see what else. So cash flow versus wealth. Cash flow is good. People think about cash flow. Cash flow is just one little piece. True returns come from combining all six profit centers, not chasing just monthly cash flow. All right? So, three things happening at once. Tenants pay down your mortgage, inflation erodes your 30-year fixed rate debt, you build equity faster. Okay, keep this in perspective. Triple digit returns are deal specific. It can happen. No, it's not a guarantee. Nothing in the world is guaranteed except death and taxes, right? So we require strong underwriting. That's another ball game. All right. So underwrite conservatively, treat inflation-induced debt destruction as a bonus, not the plan. So real estate wealth is built through leverage plus time plus inflation, not just monthly cash flow. Okay? So the opportunity, I'm going to give you a real life example. I know there's a lot of ways to buy properties, a lot of different types of properties. There's multi-units, there's commercial, there's storage units, there's apartments, single family homes, fourplex, threeplex, right? So there's a lot of different strategies. But I'm going to talk to you about today's co-living strategies, up and coming. We have a quadplex, which is a fourplex, which is this is this is the mother of all co-living properties. This is a quadplex, 20 bedroom, 20 bathrooms, around 920K. It's not official yet, but my team here in Florida, Jacksonville is producing. They are in a couple of months. You will get the rendering. We will get the property official, but the number I'm going to share with you is not official. I'm going to use inflation debt induced debt destruction along with the other 6 profit centers to dissect this amazing fourplex co-living, new construction, rent by the room investment model, which is the fastest growing real estate asset class in the country. Okay, we partner with Pass Split, and we have a co-living property manager where you as an investor, if you buy one of these investment models, you're gonna be now happy camper. All right, you're gonna outsource everything and delegate everything to the Pass Split marketing tech platform and the co-living property manager. So you can be uh off what's that word? I keep missing this word. Hands off. Yeah, you can be hands off investor. Okay. So you can you have time freedom. Okay, you don't need a second job. You don't so it's almost passive. Okay, you can scale to 40, 50, 60 doors. But those 30, 40, and 50 doors, if you buy this type of co-living properties, is only about 3 or 4 properties equals 30, 40, 50 doors, right? You don't have to buy 50 doors of 50 single family home all everywhere. That's brain damage, all right? You don't need that many doors or units to achieve financial freedom, but co-living, because you buy. I'll share that with you, right? I mean, this is our model. Okay, this is a 2020. This is a rendering of the property. Okay, 20 bedrooms, 20 bathrooms, 1 bedroom, one private bathroom. Of course, we went to with the workforce housing, right? We help people with affordability factor is which is acute, which is the demand is so great for rent by the room model. Is all over the country, not just in Jacksonville, Florida. So this is a pro forma, if you will. I mean, I'm not going to spend too much time in this matter, but you can just digest this purchase. You pay like what? You pay only 20% down payment, DSCR loan, debt service coverage ratio loan of only 5.5%, 30-year fixed rate. The builder's loan buy down that we have, which is absolutely incredible. Nowhere else you can get a DSCR loan to leverage into this 920K quadplex, which will bring you $1,000 per month rent, gross rent. At 20 rooms, do the math, $20,000 gross rent per month times 12 months, $240,000 gross rent per year. Again, this is just a projection. It's just a pro forma. But the reality will come into play once you go through this experience. So here's the loan terms, and here's the all the applicable expenses, the whole 9 yards. All the metrics we provide, all the numbers are very realistic, if you will. Look at the capitalization rate, like 15.5% cash on cash return, 47%. That means at the end of the first year, half of your down payment is recouped by how? By your annual net cash flow, which is right here. If your monthly net cash flow is 7674 multiplied by 12 months equals 92,000 divided by your down payment, 195,000 equals 47% cash on cash. That means at the end of the second year, your net cash flow at the end of 24 months equal your down payment, 200K, and you got yourself a $920,000 income producing high cash flow property, co-living brand new fourplex, okay, to accommodate the workforce housing for people who can barely pay their rent on a regular basis. Okay, you're helping the community, you're helping these blue collar workers have a safe, clean place to live and achieve very good returns. A win-win situation for you as an investor, win-win situation for the community in which you serve, helping people with the affordability crisis, and this happening all over the country. With the people cannot even afford to pay regular 1 bedroom, 1 bathroom apartment rent, so they come to your house to co-live, to rent a room with a private bathroom and the whole amenities furnished, the whole 9 yards. And the returns is absolutely amazing. And the fun of all is with the inflation-induced debt deduction is look at this number right here. The inflation-induced debt destruction, like I said, how do we come up with this number? 55,000. Again, 3%, right? 3% multiplied by the loan. Okay, actually 5% multiplied by the loan equals 55,000. So you're getting a hidden wealth effect with the inflation debt induced destruction to the tune of 24,000. Okay, all right. So you follow me? So 2.2% is the real interest rate multiplied by the loan amount equals inflation-induced debt deduction of 24,228 annually divided by monthly 2024. This is part of your overall return on investment. So you add up the annual net cash flow and the principal reduction also, right? This amount is all this is a profit center. And if you do a cost segregation, right? If you do an engineering study on this 920K, you do a cost segregation, you can accelerate your depreciation of your property, of your building, all to the first year. It's a bonus depreciation, right? Instead of paying 27 and a half year of a straight line paper phantom depreciation, you are lump everything together in the first year. So I know everybody have a different tax strategy, but our estimation is such that your cost segregation is another profit center, so to the tune of how much? To the tune of this time 55,000, okay, per year, $4,600 of a monthly savings. So you add all these up, right? Which is equal to gross equity income. Your annual depreciation projection is 4%. Okay, so you add on at the end of the first year. At the end of the first year is your 92 grand of annual net cash flow the first year. Principal reduction 9,900. Your potential tax savings of cost segregation and accelerate your depreciation, okay, against your income, and then your first year appreciation of estimate of 4%. You add all this up equals 218,000. 218,000 divided by your total down payment of 195K equal return on your investment with cost segregation and inflation-induced debt deduction equals 112%. That means you can recoup all your money at the end of the first year, your entire 200 grand. So essentially, you're buying your property for free. Oh, I know, I'm exaggerating a little bit. Okay, the number are, sort of theoretical, but it is a reality once you experience this process. So not just this fourplex co-living property, any rental property that you're buying today, you need to use this type of numeric metrics. All right. So it's not all about cash flow. It's a whole bunch of profit centers. Now you see you hear and you see and you feel the excitement or become a real estate investor these days, right? Don't let all the negative information you see out there, right, on social media, whatever, or the fear analysis paralysis, doom and gloom scenarios out there. You just focus on your investment strategy, focus on your buy box, okay? If you qualify, you do this kind of deal, right? That with the highest return. Co-living is much higher return than traditional rental, than short-term rental, Airbnb, mid-term rental, whatever asset class out there. This is my subjective feeling that co-living in a way that we do it right now is the game in town. So I'm not going to go over the other investment model that we have. We also have, 7 bedroom, 7 bath bungalow, single family home in Jacksonville, Florida, 320K. Here's our number, 20% down payment. Net cash flow is 2,000. We use the same calculation, but we am using propertytracker.com. Okay, it's a free software. You can do it. You can learn it. It's not that hard. It's not rocket science. You can crunch the same numbers. You can do your underwriting same way I'm doing. I'm showing you. I got this from the property tracker, which I've been I subscribe, for this monthly property tracker for the past 15 years already. And so this is knowing how to do the pro forma, knowing how to underwrite, how to crunch this basic number will make you such a much better real estate investor. It's going to inspire you to do more, to buy more, so you can achieve your definition of financial freedom. So anyway, long term, I'm not going to tell you, year over year, good thing is going to happen. Your rent going to increase. Your your loan gonna decrease, right? And you have more equity spread. Your LTV, loan to value, is gonna decrease. You have money to refinance at the fourth and fifth year if you want to leverage into more properties. You can do so many things, right? You can leverage, you can scale, and of course we have a system, process, and procedures in place. You can do it remotely, out of state, anywhere in a country or in the world. You can do this, all right? And yeah, okay, we can have a 1414 plan, duplex, 600K, and here's the down payment, and then minus your gross rent, minus all your debt and expenses equal $5,000 monthly cash flow. I'm not kidding. Okay, and this is the breakdown. If I included all the profit center, which I already described to you, the return of ROI the first year is 64% with the inflation-induced debt destruction, which is right here, right? 17,000. Okay, and then of course, if you do a cost segregation, you can get even higher return in the first year, 87% return of your investment of 171,000, which is absolutely crazy. Anything else? Okay, this is the procedure to buy our co-living properties, and we're gonna build the property for you. It'll take time. So you reserve the lot and we built it for you in the next 6 or 8 months, and so forth. All right, and of course we have other type of properties available. Look at this Buffalo Niagara Falls property, turnkey. The tenant is ready, already renovated. Everything else is ready to go. You can buy this single family home, $70,000 property with only 15% down payment, which is equal less than 15 grand, including closing costs. Total will get you a positive cash flow property right from the get-go of $215 monthly. Amazing, right? If people lacking capital, rookie investor want to get started, want to get your feet wet. Yeah, Buffalo Niagara Falls is a turnkey provider. We can provide you with this kind of ready-made turnkey, rent-ready, tenant occupied properties. You can cash flow from day one, and that's right, 50% down payment, and you have to pay a PMI, private mortgage insurance. The private mortgage insurance is only like $20 per month, no big deal, right? So that's why less than 15 grand total out of pocket, you'll get you a positive cash flow property you can invest over time. Isn't it amazing? That's how you leverage. That's the power of real estate investing. And of course, we have other properties in other markets, including hot Sherman, Texas, which is a semiconductor hotspot of the country, and you can buy new construction for only like 206,000, rent for 1,600, cash flow with 452 with the buyer rate buy down by the builder, 1% closing cost credit, and the first year property management free. Is an amazing market. What a great cash flow, right? All right, so that's pretty much it. So at the end of the day, what just taught you, whether you're a rookie investor or experienced investor, what I just taught you about how inflation gonna build your wealth, how inflation debt destruction, IIDD, if you will, is part of your sixth profit center, right? When you buy an income property, you are getting this multi-dimension aspect of owning just one property. Imagine you can leverage consistently over time to scale your portfolio and do it without a second job, right? You leverage our team. We've been doing this for years and years and years in the Florida and Texas market and elsewhere. Okay, I've been doing this for more than 20 years. I have consulted and helped hundreds and hundreds of investors from all over the country, especially in the high cost Bay Area, to buy off market, out of state, long distance, remote, using professional property management. And with respect to the co-living properties, we use an amazing platform, PassSplit, who does all the tenant screening and tenant monitoring. And as 99% passive investors that you are, you can do this, okay? You can do this. And if you have the capital, if you have the motivation, you have the inspiration, if you want to accelerate your retirement, this type of strategy will help you achieve your financial freedom goal a lot sooner than you thought possible before you heard my presentation. Am I right? All right. So with that said, if you see any value whatsoever from this presentation, please like and subscribe to my YouTube channel, and also put your email into my newsletter database so you can become a free member of our real estate community, the Ye Real Estate Network. So every week in the morning, in your email inbox, you'll receive free contents about housing markets, investment opportunities, the whole 9 yards, so you can become a more informed investors. And hopefully one day, sooner than later, you can take action from the information you receive from our real estate investor network community, and take action, achieve your goals. All right. And of course, finally, you can always contact me directly. My contact information is below you. So you can contact me to do a complimentary consultation if you qualify to do this kind of deals. Contact me directly. We're going to have a complimentary consultation on the phone or by FaceTime or even Zoom video, so we can determine whether your goals and your objectives are in alignment with the kind of investment models that we just talked about. All right. Thank you so much for watching and listening. I'll see you next time. This is SeeWing Yi. Bye-bye.